Hello everybody. Welcome today to the Idaho Hay and Forage Situation and Outlook 2022 discussion. My name is Stephen Hines. I'm the County Extension Educator in Jerome County, Idaho, and I'm going to be sharing the forage information with you today. So as we get started looking back a little bit, the year of 2021 was quite interesting for several different levels. To start with, we had the drought, which a year ago when we were given this discussion, that drought really wasn't even on our radar. And in fact, looking back at some of our data from last year, we said that the year was looking good and drought was not a problem. Well, that certainly was not the issue in 2021. We know that for the export producers, shipping has certainly been a problem, and I will talk about that just a little bit today. Labor issues on farms and trucking and that situation has been a real difficulty. And then, of course, COVID just kind of throwing our entire world and economy into a tailspin has, we're still reaping the benefits, if you will, of that. So today we're going to look at the supply situation, the demand situation, and try to do some price prediction a little bit. Let's get started right into supply. Now, one of the things about forage data is that we're always tend to be running about a year behind. So we're going to be looking at some 2020 data today, although we're going to try and make some estimations in 2021 as we look forward to 2022. So taking a look here from data from the Livestock Marketing Information Center, what we're looking at here is December 1 hay stocks, and this data came out exactly almost 1 year ago. And this is kind of looking at the amount of hay, and this is all hay that's setting on farms across the United States. Of course, we're going to be more concerned with the western half of the country because that's really the production area that our hay goes into. Now, if you look at Idaho sitting there at about 2.5 million tons, that's pretty normal. If you look at some of those lighter colors, though, especially there in Nevada, Arizona, and New Mexico, there's not very much hay setting on those farms last December. So let's take a look at what happened then through the year. Now, the change from 2019 to 2020, you can see, for example, Nevada has quite a bit less hay than they did in December of 2019. The rest of the West, not too bad. Oregon down quite a bit there. But when we look at the May 1 hay stocks, and this would have been May 1, 2021, so this year, so that would have been the winter disappearance off of those hay stocks, you can see that the western United States is setting pretty lean on hay there. Now, Idaho is 410,000 tons, and that's actually not too bad, but we'll talk about where that number sets as far as some historical numbers and looking forward. But look at California there, for example, who has a lot more dairy cows than Idaho does at only 220,000 tons. And then especially in Nevada and down into Arizona and New Mexico, there's just not a lot of hay setting on those farms going into this year. So the percent change from 2020 to 2021, especially look at the western half of the United States there and all of those negative numbers across there. It's really easy to start to see how this hay situation that's set up in 2021 actually started with these May 1 hay stocks. There just is not a lot of hay setting on farms here in the western United States, and that's really no story for those who are paying attention here today, but it certainly set up or helped set up the situation that we saw in 2021. Now, when we look at other hay, this is hays that are not classified as alfalfa across the United States there. You can see that the other hays are predominantly grown in the eastern side of the country. We'll look at it at the percent change there from 2019 to 2021, looking at other hay. Their total U.S. production is down just 0.3%, so not very much. But again, even in the western half of the United States with other hays, look at all of those larger negative numbers sitting there. And that really sets up the situation for us, is that there just wasn't a lot of hay to get started with as we headed into the 2021 production year. So just looking at some summative data here, we can see that nationally production was down 1% from 2019 and down 1.2% from the 5-year average, which is really not a lot probably Idaho was up 3% from 2019 and up 1.2% over the 5-year average. And you can see those numbers in the chart there. And again, 2020 is the most current data we have. The 2021 data actually won't be released until after the 1st of January. So let's look at alfalfa specific production in 2020 across the United States. 53 million tons produced in the United States. Look at Idaho there at 4.5 million tons. That's actually about normal for the state of Idaho. And again, we're talking 2020 numbers, not 2021 here. We're looking at the western United States. All those states were set up pretty well, not too much hurting on production there for the alfalfa. When we look at the percent change in alfalfa, though, look at some states like Nevada, and of course hay from Nevada goes over into California. And you can see that California was starting at a deficit or had a production deficit there as well. Idaho, 2% positive change, which really isn't a lot. Oregon, hay from Oregon goes into Washington and California markets as well as into the export side of things. So looking at 2020 Idaho hay production, and here we have, we're looking at production numbers from 1990 through 2020. So 30 years of data there. You can see that for the last few years, 2016, 17, 18, up through 20, Idaho production has stayed fairly steady with slight increases every year, and that's indicated there. Now, of course, we don't have the numbers yet, but just given the drought, given the irrigation situation on some districts across southern Idaho especially, but across the western United States. But in Idaho, I expect to see that alfalfa production number is actually going to be down in 2021 when those numbers come out in January. So when we're looking at alfalfa hay production, it was down in the United States, up just slightly, that 2% in Idaho, and still up over the 5-year average. But again, we're looking at 2020 numbers, and I expect to see these numbers drop off a little bit when we start looking at the 2021 data in January. So what else is going on here across the United States? This is some data that shows all hay stocks in the United States with a little bit of forecasting here, so we start to get a little bit of feel of what we're looking for as we head off into 2022. The Livestock Marketing Information Center there showing that all hay stocks December 1, which is what we're looking at right now in 2021, should be up just a little bit from 2020 and then down a year from now in 2022. And unless something changes with the drought in the United States, I would say that that's a pretty easy prediction to make. So here we're looking at it a little bit different way, where we're looking at the December 1 hay stocks. And again, this is U.S. We're looking at alfalfa hay production in the green bars and then other hay production. So looking at 2021, the forecast numbers there are showing that the alfalfa production is down, which I think we're going to see when those numbers come out. Also, the all other hay numbers are down a little bit. And then the projection into this next year is that alfalfa number will come back up just a little bit, as will the all hay number. But the December 1 hay stock will be down from what it is this year. So looking at total production, added to the May 1 hay stock, again, a little bit of forecasting there. 2021 definitely down from 2020, and then 2022 will be up when we're looking at the total of the May 1 hay stock plus the annual production there. So what does the Idaho alfalfa acres look like, and our total forage acreage, not including pasture, but these are really feeds that are headed either into the beef cow market or especially the dairy market. Our hay acres, or our alfalfa acres, have stayed fairly level. One of the things that's interesting there, starting in 2005, we were able to split dry hay and haylage acres, and what we're seeing is that the haylage acres are starting to increase a little bit. And some discussions I had a couple of months ago with some custom harvesters told me that they're starting to chop a lot more hay going into the dairies. And so some of that dry hay is being converted over into chopped hay for those TMR. And maybe our dairy forecast guy will talk about that a little bit. You can see that the corn silage acres in Idaho have continued to increase. We're kind of looking at that 30-year number there. Corn silage has added about 6,500 acres a year on average increase, and it's not very hard to drive around southern Idaho for sure and see that vast amount of corn acres. This last year was about 280,000 acres goes into silage. That does not include the grain corn acres. And just another interesting way to look at the data on the dry hay per cow, and this is per dairy cow, and that has drastically dropped since 1990, which really, as the dairy herd in Idaho has increased, the number of hay acres has not necessarily dropped. It's just that hay acres haven't increased at the same percentage that the dairy cow herd has. Now, granted, a lot of this alfalfa hay does go into the beef cow market, but one thing that we know, especially in the dairy producing areas, the Treasure Valley and the Magic Valley, is that a lot of that alfalfa is imported. There's just no way that we can produce enough alfalfa in those regions to meet the beef cow herd and the dairy cow herd demand. And so a lot of hay is brought in from other parts of Idaho and other areas. So a summary in 2020, those May 1 hay stocks are down 16% in Idaho and 12% in the U.S. I think we're going to see those down to an even greater level in the state of Idaho for 2021 as we head into 2022. The production the alfalfa and other hay acres are steady in Idaho and slightly lower in the U.S. The production in 2022 was up in Idaho and down in the U.S., but again, I think that we're going to see that 2021 production is down in Idaho again when those numbers come out in January. Idaho and other western states experienced ill-timed rains both at first cutting and fourth cutting this year, which dropped the overall dairy quality. Interesting to note, though, because of the supply this year, I've heard several times that the dairies are less worried about quality. They're just worried about being able to get hay put onto the dairy. And in fact, was visiting with a dairy producer just earlier this week, and he said, right now, dairies just seem to be buying hay and they're testing the quality later. They just need to get hay on those dairies. So what that tells us is that those guys are having a hard time finding that hay. So that tells us that the production is down from this year, and that disappearance over the winter is likely going to be pretty significant, and especially so if we should get a strong winter and the need for more energy in both the dairy and beef demand side goes up there. The December 1 hay stocks are estimated slightly higher in the United States overall, but in Idaho, again, I am predicting that those December hay stocks, the ones that are going to be recorded right now, are going to be lower when those numbers come out. U.S. production in 2021 is estimated lower by the livestock marketing folks and up slightly in 2022. So I think you can start to see a picture of what might be taking place in 2022 as we start talking about price here in just a few minutes. So let's look at the demand side of things. The supply and disappearance, the exports, the substitute feed, and really we're going to be looking at corn as the other protein there, and then the dairy demand a little bit. So the all hay supply and disappearance, and this would have been in all the years when we look at 2021 and 2022 again, those are estimates of what's going to happen. So the blue bars there are hay supply, and the red bars there are disappearance. And you can see that the estimation for 2021 is that the hay supply is down and the disappearance is also down. And then those are going to be coming back just a little bit in 2022, but doesn't really bode well for the amount of hay that's going to be available until that new crop comes off starting in May of 2022. So let's look at exports just a little bit. And the key piece on this graph here, if you would look at that dark dashed line, that's the alfalfa hay, and you can see how that has just continued to climb over the years. And the other hay, which is the solid blue bar there, has decreased slightly. The other are cubes and meals, and those have stayed fairly level. Let's look at this graph. We're going to look at just the last 5 years. This is looking at data from 96 to 2021, and the next one here is just going to look from 2016 through 2020, not 2021, excuse me there. And you can see on the top there, that blue line is showing alfalfa hay has continued to increase just a little bit in 2020. And so that bodes well with the exports, but of course we've had problems with exports with other situations this year that we'll talk about. Here's West Coast. This is some data from the Hoyt report, and here's West Coast alfalfa exports to China. The China dairy herd is increasing, and my understanding is that China can get hay from other places, but they want United States hay because the United States does produce the best alfalfa, the highest quality alfalfa in the world, and that's the hay that they want. The problem is, you see that bar drop off there because of the problems at our ports and the shipping congestion at those ports, that we just can't get the hay there. The shippers have found that it is cheaper to send empty vessels back across the ocean to China to refill back with their product and bring back to the United States rather than to wait around the ports for our hay to be backloaded onto those ships and taken back to China. So they're essentially doing an empty backhaul and bringing a more profitable product back than shipping our hay back. And so our hay and a lot of our other ag products are just sitting there waiting to be moved. Here's a picture that I took. Now this is some GPS data that's showing the shipping ports there of Long Beach. Now notice this is October of 2019 when things were still working pretty normally. And you will notice the darker red dots there. The red dots are cargo vessels. The other ones are all other kinds of vessels, things like luxury liners and those types of things. But really pay attention to the red dots and the number of those that are sitting in that port in October of 2019, and then jump ahead to October of 2021 and look at all those shipping vessels that are just basically anchored off of the ports. They can't get into the ports. They can't get the ships unloaded. And there's actually some data online that will show GPS recording live of these ships moving in and out, and they're just basically circling outside those ports trying to get in there. And so this is a problem when the ships can't get in and get unloaded, and then they can't get reloaded and back off to wherever they're going. That really causes problems with our hay trying to get to export. Here's some other data looking at 3 ports in California and 1 port in Washington at Seattle. So the blue bars here are the Los Angeles ports. The yellow bars are the San Diego ports. The kind of lavender bars are San Francisco port, and then the red bars are Seattle. And the ones to really pay attention to there are the one in Los Angeles and the one at Seattle. And you kind of look at the drop from 2019 to 2020. There, especially in the Los Angeles ports. And this is for alfalfa meal and pellets that are leaving the West Coast ports. And then a very similar kind of situation. Now this is hay, and in this grouping, this is hay, clover, vetch, etc. But this is where the dry hay would be included. And you can see that the amount of dry hay being able to leave the ports from 2020 to 2021 is down from what it was in 2020. And that's a problem for the hay that's going to export. So let's ship and look at some other protein sources. In this case, we're going to look at grain corn. And this graph here, we're looking at the total corn supply as compared to price. We know the price of commodities has just really increased in 2020. Corn is no different. You can see that by that red line on the bar there. For 2020, it's over $5 a bushel for corn. And then you can see that bar drops, or that red bar drops off a little bit. And the reason for that, looking at some price prediction from into 2022, where the U.S. corn yield is expected to increase some. Exports are expected to decrease. Feed use is expected to decrease. Production is expected to equal or increase, and that would be in acres. And then the in-stocks are expected to increase by 340 billion bushels. So all that being said, the livestock marketing folks expect the corn price in 2022 to drop a little bit. So we'll look at some data here in a little bit that says, well, if the price of corn drops a little bit, then perhaps the price of hay will drop a little bit too. Well, we'll look and see what we think about that. Here's the annual corn ending stocks, and you can see over there from 2021 to 2022 where that predicted is supposed to increase a little bit in those stocks, and that's where that 340 billion bushels is expected to show up right there. So let's look at the Idaho situation a little bit. This graph here is looking at Class 3 milk price, and we're looking at 30 years worth of data here, and you can see that the price of milk, you know, if you look at the trend bar, that's the average, but as you can see from the actual milk price, that's just all over the board. And while the trend is kind of obviously increasing, the price of milk has been really volatile, except for these last 3 years where it's kind of evened out and it's been in that high 17, low 18 price range. And what I'm indicating there with that light pink or light red bar, that is where the break-even price is estimated to be right now, somewhere between $17.50 and $18.50 a hundredweight. Of course, that depends on the size of your dairy. It depends on how efficiently you're feeding. It depends on your ration. It depends on what you've paid for your ration components, etc., obviously. But what that is showing is that the milk price is currently right in the same area as the break-even price. And it's pretty hard for dairies to be overly profitable and have money to spend on things like feed when their break-even price is right in there with the milk price. And so the question is, what is that milk price going to do as we look forward into this next year? So let's look at some additional information from the Hoyt report here. This is Idaho hay specific price, and we're looking at Supreme hay, and this is freight on buyer. That's what FOB stands for there. And this is the dairy and the export hay, and you can see the blue bar there is 2021. Look at what's happened to the price of hay starting in June, where it was somewhere in the neighborhood of $225, currently setting, according to this graph, in October at $265, but it's even higher than that now, and I'll show you that data. In fact, again, was talking to a dairy producer the other day and told me that he knows of hay in Idaho on dairies being purchased at $300 a ton right now, and they're just happy to get it. This is the fair quality price, and you look what it's done from $165 in June to well over $225 in November. So that spread between fair and supreme is really not very far, and I think that adds some credence to that comment that essentially these dairies are buying hay and then testing it later, just trying to see what they have and then trying to make that fit in the ration just so that they can get the hay. Looking here at some western regional rangeland and pasture condition, I highlighted there the percent that's poor or very poor. This data comes from the USDA NASS data, which is compiled weekly on that crop condition and report. Take a look at that. What that is showing there, the blue bar, is that, you know, since May, well over 50% of range and pasture has been deemed poor or very poor. So that tells us a couple of things. One, there's not very much feed out there for those cattle. We know that cattle herds have been pulled back off of the range early because there's just nothing out there for them. We know that the winter range is not in very good condition. Well, those cattle have to eat something, and so that brings beef cow guys into the market when they traditionally may not have been, and that is what has really buoyed that feeder quality or some of that just fair level quality hay and really helped hold that price up. Unless something changes this winter with our weather conditions, this prediction here in the western range is really not going to change the story very much. So here's the drought monitor. I pulled this off just this morning. This is the most current data that is available. And so you can see that severe, extreme, and exceptional drought across the western United States just continue to persist. Look at California and Nevada there. Those are two other states that are very important for production of alfalfa that's dairy quality. Not looking good for those states. And even across our area here in southern Idaho, we're certainly not in those dark reds and dark browns there, but we are still in severe drought. And again, unless this precipitation through the winter, something changes, that's not going to change. In fact, is likely going to worsen as the winter continues and we head into our spring production year. We already know that in southern Idaho that there were some irrigation districts that were shut off early this year. We know that there were some other irrigation districts that cut back. And if those winter snow supplies aren't replaced in the mountains, that condition is only going to worsen as we head into 2022. Here's kind of looking forward into what's going to happen with drought. This is looking as far as the end of February 2022. Looking up there in the Pacific Northwest region, Idaho, Oregon, Washington, and the western half of Montana and just a little bit of Wyoming. The drought is predicted to remain but improve, and so there's a little bit of positive forecasting anyway, although the snows have to happen in order for that to happen. But if you look really in the southwest United States, there's just the drought persists, and when they talk about La Nina, that's sort of is what they're predicting, is that a little bit more moisture in the upper part of in the northern part of the west, and the southwest tends to stay a little bit drier, and that's what this is predicting here. So not looking good, especially for our livestock producers in the southwest, and of course the California dairy herd is a major one of those. So summing up the demand side here a little bit, the domestic hay demand is up, certainly up because of the drought. The export demand was good, but shipping problems prevented moving that product. Corn and other protein prices up. Dairies are producing near their break-even price, but they are putting in hay because they have to have it. So they're essentially right now buying it at whatever price just so they have that to feed. Now, looking at the Hoyt report this morning, the most recent one that came out this last week, indicated that the dairies right now, at least in Idaho, have pretty well put in the hay that they need. And so they're backing off on their buying, hoping to be able to make it through until that new crop hay comes out in May. The nutritionists continue to reduce alfalfa in the TMR. Just not very many years ago, that average was somewhere around 7 pounds of cow a day. Now that's down to 2 or even below. And so we're kind of seeing a push from dry hay, at least in southern Idaho, maybe into a little bit more of the chopped hay product. They're replacing that. The pasture range condition has been miserable and will continue to be so and worsen unless we get some winter weather this year. And then the U.S. drought situation is the worst that we've seen in many, many years. And again, depending on what the weather happens, that is just not going to improve unless we get really some above average rains and snows through this winter. So let's talk about some things that come together for price. The current prices are well above what's being reported by NASS. In fact, I was just looking, the current data was showing prices running somewhere in that $180 to $100 a ton price for hay. Wouldn't you like to be able to buy hay today for $190? And you just can't find it. Essentially, if there's a string around it and they can move it somewhere, that hay is going to be more in that $250 a ton hay. You can see there on the graph that the current Hoyt report showed fair hay at $235 and supreme hay at $275 this last week in southern Idaho. And so the NASS data is not really reflecting of what's happened in the hay price currently. And so let's see how we look at the seasonal price variation, and you can see that we're kind of at the top of that market this year. And when we look at these price indexes, now granted this data is just a little bit old, back into 2017, but the annual purchasing predictions still hold pretty well. We've kind of reached that peak and should see the price start to soften as we head into the May new crop. But if drought persists, if beef cow guys have to find hay to get those cows through because of lack of winter range and pasture, then that may not hold this year for us. So trying to predict that 2022 price, I don't know that I'm going to be able to come out with a dollar value for you today, but at least give you some tools to think about a little bit. So when we look at production and price, do they influence each other? Is price influenced by production? And when we look at the data here, this graph basically looks like a bunch of malaria germs just kind of dragging around the chart there. The correlation 0.02 is not very strong at all. Obviously if our alfalfa production dropped to 2 million tons in Idaho, then that certainly would affect price. But when it's up around that 4 to 4.5 million tons, it's really not predictive of what the price is going to do. How about hay price and corn? Well, they are moderately correlated at a correlation number there of 0.28. It's not really strong, but there's at least some influence there as far as other proteins go. How about the hay price and milk? This is one, I have talked about this before if you've heard me give this presentation. I have said it many times, as goes the price of milk, so goes the price of hay in southern Idaho, and I'm still going to hold on to that this year. We can see that the correlation there is 0.76, which is fairly strong. That it indicates that there are some other things going on there, but the price of milk really is fairly predictive of the price of hay. And basically what that tells us is that when the price of milk is high, dairymen have money to go out and buy hay. And when the dairymen have money to buy hay, they are going to drive the price of that hay up. And we've seen that year after year, especially here in Idaho. Here's some data I put together. I like rules of thumb. In extension, we kind of like to say, well, if you just kind of use this basic predictor, that'll get you close. So here we're looking at 40 years worth of data for milk price and hay price. And the question is, can you predict the hay price based on what the current milk price is? And so I ran a correlation for 40 years worth of data. That correlation is 0.77, which is fairly strong. It does tell us that there's some other things going on in there, which we'll look at a couple of those. But until we got to this year and the current supreme price, let's say that's somewhere between $275 and $300, it's pretty hard to make these particular numbers here work. But until we got to this year, I was pretty comfortable saying that somewhere around, if you took the current price of milk and multiplied that by about 9, that should get you pretty close to predicting what that price of hay would be. But again, this year, that predictor just went right out the window. But we had some other things at work. We had a drought that we really weren't seeing coming in. We had some supply chain issue problems that we weren't seeing come in. And there's some labor issues, some trucking issue problems. All of these things have been kind of anomalies when we're looking at 2021 and predicting that price. So will that help us with 2022? Well, I'm not sure. We'll talk about that. Now, I just showed you this graph, and I want to show you some things of where some of those anomalies come in. When we look at that black ring to the left there, what that's showing there, that's a really high alfalfa price. That year, that was about 2008, the May 1 hay stock was sitting at only 280,000 tons in Idaho. So very, very low levels of hay. And so the hay that was available was being purchased, and that pushed up that price of hay. The price of milk did not follow that up quite as high, but you can see that the price of milk did come up there with that. If you look at the middle one, that is also a low May 1 hay stocks. That was about 300,000 tons there in Idaho. So it bumped, the price of milk was up just a little bit there. But that's why those two peaks there are off and kind of out of that graph a little bit. And then the other one there on that milk price, it was 2014, and it seemed like the milk price was, the price of milk was tripping over itself, trying to set records. The record milk price was set 3 times in that year. And it topped off with a milk price there of about 23 for the marketing year, about $23 a hundredweight. And of course, the price of hay couldn't move fast enough to keep up with the way that milk price was driving up that year. So what that's showing you is that the correlation is strong, but there are some other things that happen there so it's not a perfect correlation, but it's pretty close. So can we use May 1 hay stocks to estimate hay price? Well, here you can see that these two graphs are just all over the place here. And it depends is what I will tell you. Look at the data there at the bottom. I tried to split this out a little bit. If the hay stocks in Idaho May 1 are more than 500,000 tons, the correlation is so weak as to not be correlated at all. That won't tell you anything. If the May 1 hay stock is somewhere between 500 and 400,000, it is correlated at 0.5. It's negatively correlated. So, and you would expect that to be. So if that hay stock is lower, then the price of hay is going to be higher. When the hay stocks drop below 400 at May 1, the correlation gets even stronger. It's negatively correlated. It's 0.77 is that correlation. So pay attention to what that May 1 hay stock. I think it's going to be pretty low as we come into 2022. So what about hay stocks and milk price? Are they correlated? Really not really. It's one fact. It's a piece of data that we can get and look at. But having a low May 1 hay stock is not really going to affect the price of milk very strongly there. They're just not very correlated. So here we're looking at all three, the price of hay, the price of milk, and the May 1 hay stocks, and kind of how they relate to each other. And so what I've kind of determined based off of looking at either 30 or 40 years worth of data, depending on which we could find there, what we need is low May 1 hay stock, something less than 400,000 tons, and I think we're going to see that this year. Or we need milk price that is greater than $18. Are we going to see that? I don't know. I guess you'll have to watch the dairy outlook and see what they tell us there. We're setting in that range right now. But essentially, high milk price leads to low hay stocks because when the dairymen have money, they will tend to purchase hay and stockpile that into the farm. So ultimately, I'm still going to hold it's the price of milk. As goes the price of milk, so goes the price of hay. Some unknowns. Will the drought continue or worsen into 2022? It depends on what part of the western United States, but none of it really indicates that the drought is going to deplete this year. We're still going to feel the effects of drought in all parts of the West, with the exception of maybe that very far northwest corner of Washington State. Will the price of milk improve? Just looking at some data from Forage dairymen today, they are predicting a strong Class 3 milk price going into 2022. So maybe there's a glimmer of hope there that milk price is going to continue to remain strong and improve. What is the December 21 hay stock volume going to be? Well, we don't know that. I checked with the NASS folks just this morning, and they don't have that number yet. That'll come out in January. I'm predicting that it's going to be low. Will the port situation get resolved so that hay can start being moved to export? I'm not sure how many months it's going to take for that to improve, but certainly not immediately. Will our international customers go elsewhere? Well, if they need hay, they're going to have to go somewhere. The Spain and that region is certainly a producer. Australia is a producer. Canada is a producer. But ultimately, we know, and it's not being vain, we just know that the United States producer does produce the best quality alfalfa in the world, and our international partners want to purchase hay from the United States. If the price of hay stays high, how will end users adjust? Will dairymen completely move dry hay out of the ration? Are the beef cow guys going to just have to find something else, baled corn, baled bean straw, something like that? It's hard to say, but they can only afford to pay so much for the price of feed. So what? So some advice for both producers and end users as we look into the future. For your operation, know your price of production. know your break-even costs. Keep those seasonal price movements in mind. Remember that on a typical year, we've kind of reached the high, and that price should start softening in the hay market until we get to new hay price in late May. Know who has the market leverage as you're working on finding product or making deals. In this case, if milk is greater than 18 or alfalfa production is less than 4.2 million tons in Idaho, the seller has the leverage. If milk is less than 18 or alfalfa production is greater than 4.3 million tons in Idaho, then the hay buyer tends to have the leverage. But throw in COVID, throw in drought, throw in port problems for export, and all of that starts to get a little bit shaky as far as being able to make ironclad predictions here today. So finally, in our 2022 outlook summary, 2022 hay production is estimated to be up nationwide. Hay 1 May stocks were 410,000 ton in Idaho. I expect it to be lower in December and lower even more so going into May of 2022. Milk prices are near or slightly above break even, which means that the dairymen don't necessarily have a lot of additional cash to go out into the market right now, and they've pretty well laid in what they need as they head into all the way into May till they start picking up some of that new market hay as well. The domestic demand is strong due to drought and will remain so as long as that drought remains. The export demand is improving, but we've got to be able to move that hay off of the West Coast ports. And so that's really a problem right now. And substitute feed prices are high all the way across the board, so there's not a lot of options to go to other feedstuffs other than hay, unless some of these producers get a little bit creative in what it is that they want to buy. And so with that, thank you for joining us today, and we wish you best as you look forward to 2022 production year.